Hey everyone, happy Tuesday. It's my favorite day of the week. That's right, it's Mortgage Tip Tuesday with It's Your Favorite Loan Officer in the whole wide world. Hashtag who? JLoan. That's right. I'm so excited about Tuesdays because I get to bring you information. But before I get into what we're going to talk about, I just hope that you had a great day yesterday. It was Martin Luther King Jr. Day. And besides his I Have a Dream speech, there was a quote that always stood out to me that I loved more than anything. And it said, "Use me, God. Show me how to take who I am, who I want to be, and what I can do, and use it for a purpose greater than myself." And this is why I do my Mortgage Tip Tuesdays, because it's really not about me. It's about bringing information to you that will hopefully help you in your purchase or your refinance, whether now or in the future. So I'm going to talk about today, how does rising interest rates affect you? Whether you've heard it or not, interest rates have risen and they've continued to rise, and they're projected to continue to rise. Mortgage rates actually have hit the highest point since March of 2020. And housing is still up, as there just isn't enough on the market of available homes. So now you're not only looking at higher prices, you're looking at higher rates, and then there's not even enough homes for you to look at, which brings you to new build, who most new builds are on a 12-month or more delay unless you're lucky enough to find a spec home. Okay, so higher rates and higher housing means that less people may qualify for a mortgage, therefore hopefully helping the housing market. And you probably say, how, right? How can this help the housing market? Because if there's not that much competition, then houses may stay on the market, which takes away the competition and hopefully will level out the playing field. I mean, that's possibly what could happen, right? But let's make it clear, okay? Because when I got in the market, rates were roughly 7 to 8%, okay? When I got into mortgages in 2006. So when people say rates are rising, they stop what they're doing, and I don't want to do anything right now, it still sounds pretty funny to me. And the reason why is because one thing I know about the mortgage market or interest rates as a whole is interest rates rise and interest rates also fall. Where you are in your mortgage today is not where you will be forever. No one, I have not met one person that has ever stayed in their same exact mortgage for 30 years, okay? And so the biggest question that you may have from my buyers and my people looking to refinance is, how does this affect affordability? Can I still buy? So let's be clear, buying is still a better option than renting, because you can still own a home for less than you would pay in the rent market right now. Rent is outrageous, and you can still buy even at higher prices. You can still buy and have affordable housing. Now, does it affect your payment? Yeah, it does. Is this gonna knock some buyers out from qualifying? Yes, it was. If you were pre-qualified 2 months ago, should you check on your pre-qualification? Yes, you should, because interest rates have drastically changed in the effect of how it will affect your payment. Now, rising rates don't affect you. If you're in a current mortgage right now and you have a fixed interest rate, this doesn't affect you. But if you have an ARM, or an adjustable rate mortgage, or you have a HELOC, which you may hear, which is a home equity line of credit, you may want to check how this may affect you, because now may be a good time for you to refinance and lock in a fixed interest rate before rates may get out of control. So I did do a couple pricing scenarios on how the market has changed. And so I did write it down because I don't remember everything, right? So I wanted to take a look at how rates truly affect you. And I did base this on what kind of the going prices of houses is here in Texas, which is around $350,000 and up. Okay, can you find less? You may. I'm not sure how nice that house would be, but you could. All right, so I based this on $350,000 with 5% down. So if you're rate shopping online, the biggest thing you need to look at, and I base this on bankrate.com, who typically, if you go on, it will tell you who has the best rates or what's going on. You need to look at the rate, because when you put it in there, the first thing it's going to give you is the lowest interest rates. But if you scroll over slightly, it's going to show you that you can get this interest rate if you pay 2 points of a buy down. So make sure you're very, very clear that when you are shopping around, you're looking at your loan estimate of what they're sending to you and seeing, am I paying to get this interest rate? Because you got to make sure you're comparing apples to apples, because if I am not charging you discount points and I send you a rate hypothetically that says 4%, and then you go somewhere else and it's 3%, I didn't charge a buy down, but they charge 2 points, you're only looking at rate. And if you only look at rate, you'll miss the fact that you have to pay $7,000 to get that rate. Whereas on mine, you may not have to pay for that. So you really want to take a look at that to make sure you're comparing apples to apples and making sure that you're making the best decision for your family. I don't disagree with paying discount points. It just depends on the situation, and I do let you know that if you want to. So again, not to make this long. So if you buy a $350,000 home, you're putting 5% down, which is $17,500, and you have a 720 score. Now, again, I'm not allowed to talk about exact rates, so I went online and I just kind of price shop, and so these are from different places, okay? So let's just say rates last year on this same scenario were at 2.75. Your principal and interest, I'm not talking about taxes, insurance, HOAs, any of that stuff, just your principal and interest on this home would be $1,357. Now, if today, per bank rate, okay, rates are at 4% with no buy down, okay, your payment would be $1,587. So this is a difference of $30 a month. May this affect your qualification? Absolutely. May you even want almost $1,600 payment? Maybe you don't. So if you've already been pre-qualified or you haven't talked to a lender, it's really important for you to speak with them to see where the current market is and if you're comfortable making that mortgage payment. And I'll tell you why in a second. So I deal with a lot of first-time home buyers who use down payment assistance to help them qualify or at least have the assets to help them purchase their home. And I did look at a loan from last April in which, with a 5% grant, the rate was at 3.75%. So free 5% money towards closing costs. The rate was at 3.75%. With this same scenario, that borrower had a $1,540 a month mortgage payment, principal and interest only, okay? Now, today's rate on that same program with 5% of grant is at 5.25%. This changes that $1,500 and $40 payment to $1,940. So almost a $2,000 payment and a $400 a month difference. That is a huge difference. Now, I'm not trying to encourage you or discourage you to buy. I just think you may need to realign your goals and what you want and not to be shocked by the market. Again, if you've been pre-approved or pre-qualified in the last 3 months and you haven't talked with your lender and you kind of don't know where you are, this is a good time to have that conversation because that is a huge difference that you may not want to pay because you never want to buy a house and be, what I say, maxed out. And I know a lot of borrowers don't want to hear that, right? Well, I'm paying this in rent, and so I don't understand why I can't do it on a mortgage. And that's really important because when you pay rent, you can call the front desk if the AC goes out, if there's any issues that are wrong with the place or the apartment, and they will come fix it for you. Well, when you own a home, you have that responsibility now on your own to make sure that you can fix these issues on your own, okay? Now, one of my great realtor friends wrote me this weekend and told me of a scenario where a borrower had purchased a home last year. They haven't been in the home even 4 months, and the home has tons of mold that has cost the family so far over $50,000. Now, I ask you, when you come and you don't have the assets and you don't have the money to purchase the home, and you get discouraged when you get turned down, these are the blessings that are hidden. Because what happens, this borrower didn't know that there was mold in the house. The borrower didn't know anything. You go in it innocently. And if you don't have the funding to take care of that, then you're stuck in a home that has mold in it, which is not safe for you. And you don't have anywhere to get that money, or we create a bigger problem, which is we put you in more debt, right? Which is now you have to go find a loan or a credit card, which creates this cycle that doesn't help you with accumulating wealth, okay? And that's the purpose of buying homes. So ultimately, at the end of the day, rates are rising. Does that mean you may not qualify? It could mean. Does it mean that the world is ending? No, it doesn't. Okay, you can still buy, you can still have affordable housing. I still 100% believe that purchasing a home is way better than renting, because not only do you build equity, most people will refinance their home in 5 to 7 years if they're even still in that home. And so it doesn't really matter where you start. You can always refinance later. When? We don't know. But I do know the trend of the market is it goes up, and what goes up always comes back down. All right? I love you guys. I hope you have a fantastic week. The weather here today is beautiful, but it's going to get cold. And you know I'm a Miami girl in the Texas world, so I don't like the cold. So I'm back in my office, COVID-free, and just blessed to be here. So be safe. As always, I'm encouraging you to please continue to wear your mask, and I will talk with you next Tuesday. Have a fantastic rest of your week. Bye-bye.